Welcome to TheStreet.com TV. I'm George Moriarty, Executive Editor of TheStreet.com, along with Jim Cramer, host of Mad Money and markets commentator for us here. Jim,
George,
how you doing today?
Good to see you, man.
Thanks
Hey,
for coming
man.
in. Great.
Oh, great.
Great. Jim, let's start off. We got to talk about it. It's the biggest deal, biggest IPO we've seen in a while, news-breaking-wise at least. Steve Schwartzman's coming public. Talk to me about Blackstone.
This is the big one. Everybody wants it. I don't know whether they should want it, but the headline is just so exciting. I don't think the public can stay away from it.
Steve Schwartzman, he's the new king of the world.
Right.
Leonardo DiCaprio will play him in the movie. You know, we're looking at, I was struck, report today says they have $78.7 billion under management. I interviewed Steve Schwartzman back in 1998 when I was in a different place. Okay. And he was talking about at the time that, yeah, they had X amount under management, right. But he says, I'm managing $1 trillion worldwide in various assets. So you extrapolate that out. I mean, Blackstone is an amazing business. And we can go on and on about what that means. But I think the really interesting story that people can learn about is why isn't Goldman on this list?
What Goldman would tell you, and I've had private talks with him, is that they're the ultimate private equity play. They just raised $19 billion, but a lot of their businesses are levered to private equity, and they do a lot of private equity. I always feel that if Goldman were to split into a private equity shop and a sales and trading shop, meaning private equity would also be asset management, so taking the asset management side and the fixed income side, you would have a $300 stock. Now, I think it gets there eventually, but it's an educational process. I think what will happen is Schwartzman's Blackstone will come and will have a 20 PE or 25 PE. Goldman's PE is 8. So, I mean, I think in the end there's an arbitrage here. The Goldman's PE has to come up. I don't think Schwartzman's PE comes down because he's a loved figure and he's done a lot of great stuff to make people feel that he's Midas. Midas tend to overall not pay off. Right. People feel he is Midas.
Now, another angle on this that I just find kind of interesting, and Mark DeCombre and Laurie Kulikowski had this on TheStreet.com yesterday. Some people are saying it's baffling Goldman Sachs isn't on there. You know, as the underwriter? Are they working competitive? Are they working with somebody else?
I think they're too competitive these days. I think Goldman has gotten in this business in a big way.
So Henry Kravis is staying private.
Well, maybe you don't know. I mean, you know, these guys are all headline guys too. In the end, There's a Trump factor to Schwartzman. I think he kind of likes the limelight. A little bit. You don't throw that kind of party that he did, the multi-million-dollar party, unless you want a little bit of limelight.
Right. But I do have to say, having worked with the guy, he's a fairly modest, unprepossessed guy when you're one-on-one with him.
I've interviewed him 4 times on Kudlow and Cramer, and he doesn't carry himself the way that he is in the papers.
Right.
You're absolutely right.
Yeah. Now, a couple more quick things I wanted to get to today. Nike. It strikes me as a lesson for retail investors to be careful when earnings come out, not to react too quickly, because that was a great press release last night. They come out with $1.37 EPS versus $1.24 a year ago, $3.9 billion revenue versus $3.61. Wow, great report. But then they get on the conference call and start talking and say, we've got some trouble going forward.
Well, I don't know if it was just going forward. North America was bad. I was writing a piece for TheStreet.com ahead of the conference call, which you should never do, and I decided not to file it because I was struck by the decline in North America. I thought that was by the 2% increase in North America. I thought that showed a bit of vulnerability. Now, it's too soon to start feeling the pain of an Under Armour. And we know, but we did know this. Reebok had dramatically cut back spending because it's owned by Adidas in North America. This should have been a Nike breakout quarter, and it wasn't. So I'm very concerned about Nike going forward.
Okay.
Like the sellers.
All right. And last thing, we're looking at drug stocks. You talked about it earlier this week on Real Money. Fed stays flat, start looking at the drugs. And then you mentioned there's another catalyst today's meeting with DNA. They're at the Genentech investor meeting. They come out at 9 o'clock and guide for flat Q1 sales, reiterated their EPS growth, non-GAAP EPS growth, I guess it should be noted, for 07 stays about the same. Can this still be a catalyst? Should people still be looking at the drugs?
I was wrong about DNA. I have liked, in defense of myself, I've liked Celgene, Genzyme, and Gilead more. I used to go with a fivesome, which was Amgen, Genentech, Gilead, Celgene, and Genzyme. I have really had to back away from Amgen, which has just become a wild card off of IPO. Another new thing today on colon cancer is not good. I had gotten a little cold feet about Genentech just because of Avast and political pressure, but I still thought until this morning that Genentech had a real chance to go to 100. I'm reevaluating that. It seems like that could be a wrong view.
All right, Jim, thanks very much for coming in today.
Thank you.
Thank you for tuning in, and stay tuned for more from TheStreet.com TV.